Hello guys, good evening. Welcome to this second lesson. We are already on phase 4. We have talked about identifying breakout structure. We have talked about coupling directional bias with time and price. We have talked, okay. So today we are going to be talking about stop purge and BMS. Stop purge, break of market structure, return to order block. Okay, so let's head straight to the charts and then we'll see what we have there. Okay, remember with the lessons that I've given to you, I'd emphasize on every video that before you do your analysis, you have to start with the higher time frames. Okay, the higher time frames here, they take the lead. The higher time frames takes the lead. Okay, higher time frames takes the lead. So now this is here is our lesson for today. Stop purge. Stop purge here is simply liquidity grab. Okay, simply liquidity grab. That is, you see the market go up, clear some liquidity, and then come back down. Okay, stop purge, BMS, and RTO. So how do we implement this on price? How do we put this on price? Okay, that's what we are going to be talking about today. These are classic patterns that classic patterns of smart money concepts. Okay, I'm going to be drawing them to you one after the other. So suppose we are on an uptrend. You notice price goes up, break a structure, and then it comes back down. Right, it breaks the previous higher low. Okay, once this previous higher low is broken, then price goes back up to a certain level and then starts going back down. Now at this point, this is a structure. This is a liquidity purge. Okay, you can call it stop purge. Stop purge. Okay, I'll just put it SP. That's our stop purge right there. Let me put it top and center. Okay, so here is our stop purge right here. This one. Why is this a stop purge now, not a BMS? Because from here, these are BMS. Okay, this is a BMS here. This is a BMS right here. BMS. That's your BMS right there. But this now is not like a BMS again. Why? Because it's like a liquidity grab. Price went up just to clear liquidity. Now, this is now a BMS right down here. Okay. This is now instead a bearish BMS. So when price goes up, clear liquidity like this, clear a high and then comes back down, break a structure. Now, some people, they don't put this as a BMS. They put it, they can say change of character. Okay, change of character with CHOC. That's change of character. Where do I get? That's some people, they annotate this as a change of character, not as BMS like what I'm saying. Okay, so it's the same thing. It's the same thing, but this is a reversal pattern. This, what you see here, is a reversal pattern. Price should be going an uptrend, creating BMS. This should be a BMS as well. But remember, I said price goes up, clear it, and then just drops. Okay, it doesn't go far too much off. It just clears the high. What is here is buy side liquidity. Okay, so price just clears the liquidity and comes back down, breaking now a lower low. This is what we call a reversal pattern. This is a reversal pattern. Now with this one here, we are talking about we now have all these things in this particular pattern. The stop purge is this one. This is our stop purge. SP can put it stop horns or whatsoever. Okay, sometimes we call it too as oh, what is that? Sometimes we call it turtle soap, right? Sometimes it's called the turtle soap, but that's not turtle soup. Okay. That should not confuse you. I'm just letting you know that there are a lot of names, but this is just a stopwatch, okay? Stop loss, that's stopwatch, clearing of liquidity grab. All right, so this is our stopwatch, the first one that we have here. Then now this is our BMS, all right, this one. So here is number one, here's one, and then here is two, okay? And then now three, which is the RTO. Now price comes back to a premium level. This can be a bearish order block here, okay? Here can be a bearish order block. All right, price returns back to a bearish order. This RTO means return to order block. So since we want to be selling, price is returning to a bearish order block. So all these things, we have them here, and this is a reversal pattern. You can still have a continuation pattern, like price will be going down, creating lower lows, lower highs, lower lows. It breaks market structure, goes back up for an RTO. Now in this case, you don't have a stop purge, okay? Price just did a decent BMS. Price will just do a decent BMS, and then it goes back up to the bearish order block, okay? That's that you don't have any stop purge at this level, okay? So here is just BMS and RTO. This RTO is this movement that is going back into that order block to continue selling. So that is what you call the bearish order block, or you can label it RTO. You sell at RTO, and selling here, you are selling at a premium level, okay? Those are PTRs. I guess I told you that. So now this is here is a reversal pattern. Price going in an uptrend, it starts breaking structure, right? And then it starts going down. But now I just want to make you understand the formal knowledge of this, okay? Just to understand it broadly. So this is one pattern. This is one pattern that I'm showing you right now. Let's go for the second one. The second one is now when you look at this one here, okay, this one did a stop purge, right? The next one that we are going to do will not have a stop purge, right? This one now is going to have what we call a failure swing. Price goes up, comes back down. Instead of creating a higher high now, it creates a lower high, and then it breaks structure, okay? Now, this one here, this is your normal BMS. Why am I this? In the first one, this was not BMS, right? But now it's a BMS. Why? Because the move back from it did not clear. The move back from it did not clear this low. All right, this swing move here did not clear this low to tell us that price was just going for liquidity. So instead, it created another higher low. And now, instead of price creating a higher high, it created a lower high. Now, this lower high now is what we call SMS. Okay, this is a shift in market structure. We call it the SMS. SMS, shift in market structure, or you can still call it a failure swing. Okay, it's a failed swing, which means that price failed to create a you have SMS, which means that price failed to create a higher high. So you have a failure swing at that point. Okay, let me just put it, failure swing. Okay, so at this point, price failed to create a higher high. Okay, price failed to create a higher high to continue the uptrend, and now it creates a lower high. Now this lower high here comes back down and breaks structure. This is now another BMS. This is now a BMS, a bearish BMS. Put it bottom and left. Okay, so this is now our confirmed BMS for the downtrend. Where do you enjoy? Wow, that network failure. All right, so I was saying at this point now, we don't have this now is our RTO here. That's where you sell, okay? You were buying because we were on an uptrend and price started breaking lower high. So that is a structure shift, price made better, an SMS here, and then you start to sell, okay? You can have an order block here, okay? Same as you might have a BC, that price will want to fill it and then sell down. You can refer back to the fair value gap video that I made for you, okay? So price can be coming back to another block here, same as it might react to a BC, a CB around this area, okay? So this is a reversal pattern, and this 2 here down is a reversal pattern, okay? Now, you have another one like this, price can go up, it breaks this lower low, and then it retests just this high. I mean, it retests just this low. Now, I did a video on the mitigation blocks and breaker blocks, okay? This now is a breaker block. You're having a breaker block right here. This was supposed to be a bullish order block, but it got broken. So it's a breaker block, and it's a breaker because price took out liquidity here, okay? Price took out liquidity above this level, all right? So this is another reversal pattern, okay? This is where you sell. This is where you're going to be entering your short position. All right. Now you had a stop purge here. This is a stop purge because price came right down, breaking this other block. And then the other block now turns to be a breaker block. All right. So that is it for this one. So we have like 4 of them. We have talked about this one already. Price coming back to a bearish order block. And then we have talked about this one, price creating an SMS movement. And then like that. So at this point, if price reacts to this bearish order block, you can add a trade when price gives you an RTO here again, okay? We are going to do a video on optimal trade entry, which you are going to be using to define your trade ranges, okay? To know when to sell in a, whether you are selling in a premium level or a discount zone. Okay, so the next one that we have here, which is for the mitigation, price goes up, comes down, goes up, comes back down. It goes up, it doesn't clear liquidity, it comes down, and then it retests this low. Now, this here now is a mitigation, okay? This RTO here is a mitigation zone. It's a mitigation. Okay, price doesn't go to clear this. So you have your SMS here. This is your failure swing, and then price comes only to this level. It doesn't go right up back to this other block. It reacts to this level. So where do you engage? You wait for price to go back up to this for price to give you an RTO here now. Price can come back to a bearish order block here or a CB, okay? So we are going to quickly look at some examples on the charts. Remember, all these things that I'm doing here, you have to start with your higher time frame. Your institutional order flow has to be the first thing in mind, okay? It has to be the first thing in mind before you'll be able to do all these things. If not, you're going to just get, you will just missed it out. All right, let me just remove drawings and then we'll start afresh. Now look at this chart right here. Price was going up, right? Let's go to the daily time frame. Okay, so price has been bullish for quite a while. Price has been bullish for quite a while. Let me even go to the weekly time frame. So look at the weekly time frame here. Price push right up to this other block, right? That's a bearish order block. Now, what happens once price hits a bearish order block? What do you think? Price is now going to be dropping, right? Price is going to be dropping because from a higher time frame, it has hit a major bearish order block. So now at this point in smaller time frames, our IOF has to be bearish. Okay, we are going to be having a bearish reaction. So you go down to the daily time frame, you see the reaction from that bearish order block. So which time frame are you going to use to engage? You can use H4. Let's go to H4 and see if you will see any clear structure. Now, remember I said when you are looking at the charts, anything that any time frame that is like confusing to you, you go straight to the upper time frame. You give you more clearer details, right? So just looking at this one here, which structure do we have here already? Okay, so price came here, did a stop purge, heading to the directly to, that's our SP right there, SP. This SP is heading to the weekly order block. Okay, everything here is in concept, guys. Everything is in concept. Okay, the stop purge here was going to a daily order block because this made a lot of people start selling here, but price was yet to hit the weekly order block. So this is a stop purge. Price went and hit the order block, comes back down, and then give us a BMS right here. Let me just annotate that for you. That's our BMS. BMS. Put it at the bottom on the left. Okay. So this is our BMS. Price came back down and broke structure. So where do you enter? You look for the last bullish candle, right? The last bullish candle, which is this one. So all this zone is a selling zone for us. Okay. So if we are selling here, we are going to be targeting now the sell side liquidity, which will be these lows, and then more lows down. Okay. Until price tells us that it's no more bearish. Okay. So if we're selling here, this will be our target. We're going to be targeting these lower lows. Okay. So this is simply the simple pattern that I just showed you. Price was going up. Remember, I said the first thing that you need to do is to look at your IOF, okay, which is your institutional order flow. Why? Because looking at this break of structure here, many people would have started thinking that we are already on a downtrend. Why? They lack the information of institutional order flow. Price was heading to a PDRA, which is on the weekly time frame. Remember, I said you always have to look at higher time frames. If you don't look at higher time frames, you get lost on smaller time frames. This break of structure here doesn't make price to be bearish. It doesn't make price to be bearish because we still have a PDRA that price was heading for on the weekly time frame. So a lot of people with our same pattern will be looking to start selling here. But what happened? Price just manipulate them and then hit their stop losses. Why? Because price was heading for liquidity up and it didn't clear it yet, but it tried to manipulate some people. So the institutional order flow, which is from higher time frames, monthly, weekly, daily, should be the first thing that you have to determine before you start looking for a stop purge, break of structure, and an RTO. Okay, that's how you trade. This is the simple pattern here. Price was going up, it creates a high, creates a lower high, a higher low, it creates a stop purge, comes back down, break structure, go back to RTO, and this is where we are right now. Okay, this is the same pattern that I just showed you, guys. So that's our break of our RTO. This is our stop purge here, and then this here is our BMS. As simple as that. Once you see this pattern, you are selling, and that is it. Why are we selling now? Price has reacted to a higher time frame PDRA, and it gives off confluence that price will want to go down. Okay, so that is it. That is the pattern that we have had here. Now price has started dropping. So like I said, you stick to higher time frames. Stick to higher time frames. Okay. So at this point now, let me just remove drawings. Now at this point, price from here has created this low, went back up, created this high, and then created this low. Okay, so now from here to here is our low. So we are going to be waiting now for an RTO. Okay, RTO, which means we are waiting for price to go back to a premium level so that we are going to sell. Like I said, I'm going to make a video on how to use Fibonacci zones, and you are going to be using it, okay, for your entries and so on. Now, looking at this, this is our range. Okay, we are already in a sell. We sold from this order block here, so price has been dropping. Now you will notice that price created some kind of equal highs here, which is a level of liquidity. We have liquidity line above those highs. Okay, so you know that the market will have to clear it before it goes further. All right, price will have to clear the liquidity before any other thing. Okay, so now let's go to let's just check smaller time frames. I want to see more reasons why price had to react, had to clear this liquidity and then start falling back. Let's just go to the 3 hours. Let's go to 1 hour. Okay. So you see how this area is a lot of liquidity line above that area. Price had to clear it. Now I want us to see why price came back up to this level. There's always a reason. If price is doing a stop purchase for a reason, okay, price doesn't just move randomly. I want us to see why price came up and it reversed exactly at this point. All right, let's all do it together. I don't know this. Let's just check. Okay, so here we have I'm just going to draw a line from this tip exactly here, so that as we go down to smaller time frames, we are going to see where price actually reversed and why it did reverse at that level. Okay, so let's scroll it here. All right, so price reverse here within the range of this up candle, which is our bearish order block, right? You see before this down push from these numerous candles, it all started from this candle here. Okay, that's our bearish order block there from the 15-minute. Okay, so if you could have spot this out on the 15-minute as your order block, then now you will know that price clearing this liquidity will head into your order block and then you smash the sell. Okay, exactly, that is how it is. So now, despite the fact that we are having some up movements here, it doesn't change the fact that we are still on a bearish market. That's why you have to stick with higher time frames. Okay, you have to stick with your higher time frames. Okay, we are bearish, but you know, 15-minute, they're trying to tell us that price is on a bullish market. So you have to stick with your higher time frames. So now, that is it. We have an entry from there and price continues to drop. Okay, now the next one is this level. Price creates another range for us. We have now a high here and no, that's too small. We have a high here and now we have a low here. So what are we waiting for? Price to go back to RTO. We need an RTO, right? We have a break of structure here. That's our BMS. And again, we even have a stop purge here. Okay, this is a stop purge because after price took this level, it came back down and broke structure. Remember that, right? Price took it, taking this high, came back immediately and break this structure. Okay, a lot of people after seeing this would think that price wants to go up and they start buying from this last down candle, thinking that it's an uptrend. No, you have to stick with the higher time frames. Okay, so price came back up to this last bullish candle, which is our bearish order block, which is the RTO that we were looking for. That's our RTO there. So from there, you're going to be selling. Okay, and even inside this RTO, looking at it on the 1 hour, we had some inefficiency right there. So inside the 1 hour, the 4 hour order block, we had this CB, very beautiful price delivery there. We had this CB that was not filled. Okay, so price came exactly inside that range of the order block. It came exactly to fill that BC right there. Okay, that's where you take your shot with your bearish order flow in mind. You push prices down for the next draw on liquidity. If you are selling here, where is your target? You are going to be targeting this low right here. So you see how price came down, took this low, and immediately it started going, pushing back up, right? So what is price doing now is trying to fill this inefficiency here, okay? And if you feel this inefficiency, we are waiting for price at the PD array to continue selling, okay? So here is now a new range for us, this high and then this low. So at any point here, let me go back to, let's try 2 hours time frame. So it's still possible that price could come right up to this other block and then we continue to sell again, right? But now when you look at this structure here, we have something like this. Price goes up, came back down, goes up, give us a failure swing, and then it breaks structure here, all right? So this is still very much possible that we can have something like this as a mitigation block, right? Remember the pattern I draw? You have something like this, price goes up, it gives you a failure swing, it comes down, it breaks structure, and then it returns back to this mitigation zone. Why? It didn't take out stop losses here, okay? This high did not clear this, so we had an SMS, which is exactly what I'm seeing here. So at any point here, we are going to be shorting USD CAD, all right? So I didn't want to make this video long because the concept is too much that simple. You're just looking for patterns, all right? You're looking for patterns. Now, even despite the fact that at this point here, where price made a bearish break of structure, you knew that price was heading for the weekly order block. So at this point, I would have marked this as my break of structure to the upside. That's the only thing that I'm going to be looking for, okay? If the market is going up, I'm interested only on bullish break of structure. If the market is on a downtrend with my IOF, I'm interested only on the bearish break of structure. I'm not interested on this to be selling here that I'm selling RTO. No, price is on a bullish move, right? So I'll be waiting for instead a break of structure and an RTO movement to go to push prices up. Okay, so you notice that price after giving us this break of structure, price came back down and then it balanced this inefficiency and then it went back up. It created another break of structure. It came back down to rebalance this inefficiency. It went back up again. It broke another structure, came back down to this other block candle. It went up again now to the weekly order block. Okay, as simple as that, guys. That this is not complicated. Immediately touch the weekly order block, you will now know that this low like this is not going to stand again. Okay, this low is now going to be broken. Why? Because price is reacting from a higher time frame perspective. I mean the higher time frame POI where price was heading for. Okay, so this is a nice piece of price action for you here to have studied. Okay, we are in an uptrend, price break structure, comes back down, feels this inefficiency, went up, break structure, came back down to this other block, went up, came back down to this inefficiency. You are in an uptrend, all right? So once price goes up, comes back down, it fails to respect this level. This doesn't mean that you are bearish, okay? Don't start looking to sell from RTO here, no. All right, you are still bullish. So that is it, guys. That is it. Our next lesson is going to be contraction and expansion integrating order flow. I don't know if you can see that. All right. Our next topic is going to be contraction, expansion, and integrating with order flow. Okay. And then that is it. So we are done with phase 4A. And now we are on phase 4B. All right. So see you guys. This video is going to be two of them. I had a breakdown on the network. So we are going to be having two of this video, part 1 and part 2. All right. So see you on the next video.